Well, I think that certainly living in very interesting times. So I would say that there is a general sense of anxiety related to the macroeconomic conditions, to uncertainty, volatility in the markets. That's for sure. But I think there is also a feeling that new ideas have to come to the fore about growth. How do you achieve growth in this very difficult environment? And even though in some ways markets are giving us some growth this year and even last year, the reality is that many leaders seem a little bit more anxious than would be warranted by the market situation. So we talk a lot about where will the next dollar of growth come from. And what I mean by that is really organic growth. There's also a lot of discussion around the economics of the business, and that goes for the banking, for asset management, wealth management, life insurance. We're hearing a lot about that. So what we try to do is provide the right context and to really engage and listen to the ecosystem and then maybe share best practices and ideas around the world. There are several key questions, but perhaps I will start with the question, who is your client today and who will be your client tomorrow? This is really an important time to think about the clientele. Where the growth comes from is related to how the clients are behaving. For example, for asset and wealth management businesses, we have been living for the past 35 years in this great, I would say, Pollyannish scenario where the massive and financially successful baby boomer generation was really walking through the pathway towards retirement. That started in late 80s, early 90s, and we've been just kind of really riding that wave for asset and wealth management and banking in many ways, because of course, large banks, life insurance companies are very engaged in asset and wealth management. But we're coming towards the end of that trend. So as a large financial institution or a small asset manager, you have to think about who is your investor of tomorrow, who is your client of tomorrow, and how will you reach them? So that is probably the most important question. Another question that we talk to a lot of people about is related to growth. Where will the next dollar of growth come from? Will you have to acquire it, or is there still an organic path to growth? And this is where it becomes a little bit more challenging, because we are seeing around the world what I would call a demographic dip. The vast baby boomer generation is really now almost entirely in retirement. They will be in the next 5 years. The Gen X is kind of starting to try to catch up and really amass more wealth in the before retirement. But really, there is then a little gap before the millennials and certainly Gen Z come onto the scene. So as you can imagine, there's going to be a bit of a discontinuity in terms of these regular inflows into investments and mutual funds and ETFs, etc. And this is what we talk a lot about. So it's about the client. Who is the client of today and tomorrow? How will you get them? And where will the growth come from? I think this is a really big one. It's almost banal to say now that we are living with kind of generations of investors that have never known anything but digital experience, and this is so true. But it's also important to think about clients and their expectations, because they are being shaped outside of the financial services industry. In many ways, around the world, financial services industry has always been a little bit more conservative, a little bit I would say, I don't want to say a little bit dormant, but maybe perhaps a little bit, and really highly regulated as well. So what you are seeing is it takes a little bit longer time to deploy new technology, to, if you will, delight clients with the experience about their financial products and services. But we're now living in an era where the likes of Robinhood or Nubank in Brazil or Revolut in the UK and Europe, and coming to North America as well, our own Wealthsimple, are really rethinking and redesigning the way that they interact with their financial customers. And that's really important, because if these expectations are both shaped by the newcomers or relative newcomers, and also outside of the world of finance. We all probably use Amazon or Facebook, and we know how much these platforms are catering to us, not to a group of us, not to a target segment, but to Goshka. I open Amazon and it's a Goshka store. So I think financial services industry will have to tackle that expectation for more personalized services and products, for more understanding of the needs and real-time understanding as well. D2C is something that direct to client, for those of you who are not familiar with the acronym, is really a real growth area. And we saw that in the post-financial crisis, 2008 and 9, when a lot of investors chose to also open accounts directly with online brokerage, online discount brokerages. And a lot of activity happened, but not necessarily a lot of, I would say, engagement happened. But now, during COVID, the younger generations arrived with aplomb, and they really started to engage, because also the offer of direct-to-client channels has become so much richer. So we're seeing the likes of Wealthsimple in Canada or Nubank in Brazil, really starting to think not just about investing, but really owning the financial relationship with the client. And this is a really important thought, because traditionally, especially Canadian financial consumers, started their journeys with one of the large banks very early on in their financial lifetime. And then they kind of stayed with them, to the extent that banks have done an amazing job progressing them throughout their various products and solutions and distribution type of support. But now we have a lot more of these newcomers saying, well, if I want this financial relationship only early on in the lifetime of that particular household, and that is definitely the case for Gen Z and for the younger millennials, how do I keep it? So increasingly, they are just amplifying and enriching their offer, really surrounding the client with more and more products and solutions. And what can incumbents learn from that? Number one is the agility. Many of those offers, and you said that's a very classic one. Robinhood started, we're just trading. This is our shtick. We're not going to do anything else. Now they have an RIA platform. They have an advisor platform. They are thinking about a lot of different things. They are tokenizing. They are introducing distributed ledger technology. So it's telling you that the agility is there. I encourage the incumbents to adopt the same idea, that you start somewhere, but you don't have to end there. And the other thing is, of course, they are very focused on digital delight for the customers, for clients. This is a mantra for many of those new competitors. I think this is something that, again, the industry at large has to really focus on. One idea that I really like is many of those younger financial firms often establish these communities, and they don't even have to be clients of these firms. They're just ecosystems. They are communities. You see those communities being mined for ideas about products, for ideas about how to engage with a financial institution, and so on. So I think that agility and that focus on digital delight is something that incumbent firms should pay attention to. This is a developing story, and I'll tell you something really fun. We saw this in our advisor data sets, starting that personalization story to percolate about 3 years ago. It was very, very nascent, but we got this impression that investors and clients, financial clients, want more customized experiences, more personalized experiences. But beyond that, advisors want to be able to deliver these more personalized experiences. Of course, advisors already do that, but if they have 3, 4, 500 clients, how can you do this really efficiently for such a mass of clients. And this is where we've seen asset managers and wealth managers around the world starting to introduce technology and toolkits that help advisors or individual investors receive that personalized type of service, but in a scalable and technology supported format. So one program like that is, for example, direct indexing. Is a great misnomer because it is direct, but often it's an advisor that is actually directing the investor into a direct indexing solution. And together with the investor, they can figure out a plan, an asset allocation, and architect the solution. And let's say the client doesn't want to have certain types of stocks in their portfolio, these can be taken out. So there's tax optimization strategies in there too. So there is slowly but surely even technologies assisting creating these more personalized experiences. When it comes to beyond that, you are seeing, of course, a plethora of products coming in the asset management. So even let's talk about active ETFs. If clients or advisors want to use the ETF structure in the US, of course, now we're awaiting a final decision on the ETF shares of mutual funds. So you're seeing a lot more ability to really package investment strategy in different ways. So this is also a trend towards greater listening to the needs of investors and advisors and really personalizing things, almost target market of one as opposed to target market of quite a few investors bundled together. So I think this is a big trend. I think we're very early on, but it's going to, with the advent of AI and agentic AI, who knows if in 5 years, a mortgage or a credit card that your financial provider is going to offer you is going to be just your own credit card and just your own a mortgage, and no one else will have exactly the same product. So this is the benefit of technology, and that is developing very, very fast. We are very, very lucky at ISS Market Intelligence. And I would say that my team, which is the global research team, is particularly excited because what we can leverage is just an enormous bank of data about products, about distributors, about advisors, about investors, about ways that companies compete and make money. And because of that, if you think about that stat of 200,000 plus investment fund products, $135 trillion worth of asset under management, 40 plus markets. And how we are able to help is we mobilize that data and we share the data with the clients that needed to benchmark their progress, to plan the future, but we also support them in thinking about the future and projecting the market. And this is, I think, our superpower. Data is power. We were into big data before everyone else, I think, was into big data. And this goes back to predecessor companies of ISS Market Intelligence. And today we have the benefit of 35 years worth of projecting demand and supply for financial products and services. And because of that, we can create the vision of the future and therefore inform strategy, as well as inform day-to-day activities and tactical approaches to grow more, to sell more, to establish better relationships, to really pinpoint the pockets of opportunities and growth. And because of our constant dialogue with a very large global ecosystem that we're able to engage, I think that many of these data sets they really come to life for our clients because we have been parts of big decisions. With our data, we've supported them with our insights. We have, in many ways, helped companies make changes to their offers, to their strategy even. And we take great pride in that. Well, there are quite a few opportunities. One being thinking about your strategy, but not being proud of your past and history, but also trying to think of a future that might be just somewhat different. Think about engaging with financial consumers, with investors, not just through the traditional distribution channels you're using, like advisors, private investment counselors, but also think about engaging them directly. Is there a path that you might want to pursue? Certainly, we're seeing a lot of younger investors moving in that direction. And I think that it's important to forge some of those bridges today, because perhaps 10 or 15 years from now, when they might need financial advice or financial guidance, technology will be there to help them. And it's not a given that they will actually go into to connect with human advisors, even though we do have a very strong projection for advisors in the next 10 years, because still many of the core relationships for advisors are with the baby boomer Gen X generations, and they are very, very strong. And many advisors are extremely trusted. So that's one thought, to think about going direct to client. In the past, it was a little bit of I would say, a perception that advisors would get upset if, for example, asset managers try to go directly to the client. I think that concept of channel conflict is really sailing into the sunset with the advances in technology and clear engagement that can be created through D2C. Another idea that I have given to quite a few companies is to really think about whether there are opportunities for partnership. Again, there are many very large companies, massive asset managers with many $1 trillion in assets under management. But I see quite a few of them actually leaning into partnerships more. So you don't have to own the entire value chain, if you will, from productizing, putting together investment strategy, productizing, manufacturing, distributing, and the investor. Perhaps you might want to partner with someone else, a platform that's maybe a direct to client and it's well established in a market where you don't have as much presence. So those are things that I'm beginning to see many companies think about. I also think that one, I would say, still very underutilized asset is the same asset that we're utilizing to help our clients, which is data. Many financial players around the world have most tremendous data about their distributors, about their partners, about their advisors, about their investors or their financial clients, but they're not quite mining that data for, or getting enough mileage out of that data. I think the next 5 years are going to be critical to really think of ways how to mobilize that data into creating a more personalized experience, into delighting clients each and every day, and really supporting your partners, distribution or otherwise, in their path to growth as well. So those are some of the ideas that we've been talking about.